time to take a look at bond market expectations when it comes to Namibia. Firstly, what are your views when it comes to budget and needs this year? And of course, especially in light of the fact that the deficit is projected to be around 3% versus 10% last year.
Yeah, good day, Sam. Yeah, thank you very much. I think our overall projection is for the deficit to be smaller this year relative to last year. Obviously, the peak program that the government has launched 2 years ago is coming to an end. And I think in terms of that, we'll see less borrowing in this year, probably because there's some excess funds left out of last year. And then also we had the very successful Eurobond issue at the end of 2011. And then last year, 850 million on the South African, on the JSE listed. The government actually only planned to raise about 500 million on that, but demand was very strong. So at the end of the day, 850 million that was raised in the South African market.
As you say, I mean, the government choosing to issue, in fact, more than it initially sought from the market, that bid to cover sitting at 2.6. And I mean, bids coming in above 2 billion rand. Does this indicate, of course, healthy appetite coming through from South African investors? Does this open up a door for more bond listings when it comes to the South African market this year?
Well, I think it's not just the South African investors that climbed in. There was some foreign investors that also showed some interest. And I think the fundamentals speak for themselves. If you look at the debt to GDP ratio in Namibia, we currently projected for 2012 to be around 26%. So substantially lower than other markets in the region. And then also our growth prospects for the year going forward, we're looking at around 4.5% growth in GDP for Namibia this year. So in terms of that, I definitely think that there'll be more demand on the bond side.
So of course positive signals there, but not really positive signals coming through from January 11th, the bond tender, where it's seemingly that the demand was pretty weak or okay. I suppose you've got the festive season also built into that, so perhaps not everyone back to work yet. But did you read anything into those numbers?
No, I think the spreads on the GC17, the shorter dated bond was still very well bid with a bid to cover ratio of about 2, although the spreads did increase slightly to 81. On the GC21, however, bids were below what was offered in the market, and we actually saw those spreads increase to 100 basis points. But you know, as I said, regarding the underlying fundamentals, Namibian bonds should actually trade at a much lower spread. And I think given the fact that the festive season is now over, we should see some more bond demand coming through and those spreads compress. Also on the issuance side, as we mentioned earlier, that we expect less bond issuance this year than in 2012.
So basically what you're saying is that Namibian bonds are offering value if you look at the traditional spread relative to South African bonds right now.
Yeah, pretty much. The shorter side of the bond curve is offering an extra 80 points, and the longer side is offering in excess of 100 points. So there's definitely value there. From a ratings perspective, if you look at Fitch ratings, we're only one notch below South Africa. So I think there's some excess value there, yes.